Hey, I had one request though. Do you have any of those World War One hats there in your office? Is that the
Yeah,
right office?
yeah. They're what I am is that I have sort of two desks in the office. One of which is the one I'm on now, has better light. If you want me to bring one of those forward or something, I don't know
I
if you
had a
can.
request that you would put one on during the interview. Will you?
Sadly, my head is too big and the
Oh, okay.
helmets are too small. But
Because one of the questions was if the Canadian government seizes Sprott's strategic silver reserves, are Sprott employees willing to go to war to defend the strategic silver reserve?
I
And
think that's one of those.
he wants you to put on one of the World War One hats while you give the answer.
Were I prepared to defend against the Canadian government, I think I would wear somewhat more modern combat gear.
Oh, like your lawyer, your lawyer's.
That would be good. That would be good.
But anyways,
when fighting the government, a campaign contribution is usually the most effective ammunition.
that's a great.
Joining us back on Wall Street Silver is our good friend Rick Rule, investor and speculator, and also the former CEO of Sprott. How are you doing today, Rick?
Life is great, thank you. I hope you all are doing well.
Thank you. Yeah, we're doing good. We want to first off thank you for taking your time to speaking to the Wall Street Silver community. First question from Ditch the Deep State on Wall Street Silver. Did the founders of PSLV examine the structure of SLV before deciding the structure of PSLV?
I need to caveat the answer with the fact that I believe so. The real architect of PSLV was Eric Sprott himself, who had very large physical silver holdings. And he wanted to securitize them, but he wanted to securitize them in a way that would minimize the need for him to trust various institutions, including, of course, the custodian banks. I would assume, but I don't know, that Eric looked at SLV and decided that from his point of view, he didn't want to trust his inventory to a structure that he believed had counterparty risks. So while I can't answer the question specifically, because I wasn't in Eric's mind at the time that he structured the product, I can tell you that Eric, in addition to being a great guy, is a great accountant, and he had no particular interest in counterparty risk when he was talking about an asset that was designed to protect him from counterparty risk. So the only answer I can give, it's a long-winded way of saying, I think so.
Okay. I wanted to follow up on, you just had a great interview with Dunnigan over on the Liberty and Finance channel. And I wanted to follow up on, one small part of that interview where you guys were discussing where PSLV is currently obtaining their silver. In early May, you indicated during that interview that several weeks earlier, which I believe was early May, it started becoming much more difficult to find good delivery 1,000-ounce bars in North America, or as you put it, anywhere within trucking distance of Ottawa. And you've had to now go have your custodian set up sub-custodian agreements in London, Zurich, Asia. Could tell us more about this as to.
I need to start by saying that was a misstatement of fact.
Okay.
We have set up sub-custodian arrangements because the Royal Canadian Mint was designed to hold gold. And particularly at the Ottawa facility, silver is more voluminous than gold. So I'm delighted to say that we exceeded the capacity that they had available to us. With regards to sub-custodial relationships outside of Canada, that was a misstatement of fact. We don't have them. We have a sub-custodial arrangement with Brinks in Canada for temporary storage. The relations that we have outside of Canada, as I say, that one was unfortunately my mistake, a misstatement of fact. We have bought silver outside of North America, particularly in London. Good delivery silver only, by the way. No refinery run or anything like that, but rather in-system silver. And the arrangement by which we buy that silver is what's called delivery versus payment, which means that we contract the bank to buy the silver from us, the bullion bank, Bank of Montreal, Royal Bank of Canada, whatever. We pay for it delivery versus payment. So when that silver arrives at the Royal Canadian Mint, we take inventory of the bars. And when we are assured that we have good delivery, we pay them. So we never have counterparty risk. Where I was mistaken is that I believed in order to facilitate transfer, that we would accept delivery in London with a sub-custodian and then ship it ourselves. That's not what happens. The silver is technically ours from the moment we contract for it, but we don't pay for it until it gets in our hot little hands. Your subscribers, by the way, will be delighted to know, because your subscribers are very interested in transparencies, that we're now publishing a bar list monthly as opposed to quarterly. So to the extent that you want to see our inventory, you can see it there. And if you want to get really deep in the weeds, if we would report, as an example, that we have 150 million ounces of silver, that silver which hasn't yet been received as good delivery and hasn't been paid for, let's say that there's 5 million ounces in float, that's reported to you in float. In other words, we will show that we have 150 million ounces of silver, 145 million of which are in our possession, 5 million of which are contracted for, have not been received, and have not been paid for. Okay?
Okay.
It's important that people understand that. The arrangement that I discussed was erroneous, and that was my mistake, not Sprott's.
You know, there's been so much silver demand between PSLV and at retail. I think it's probably unprecedented. Yet the spot price really hasn't moved. What do you attribute that to?
I think the spot price has moved. I think one of the things that you need to pay attention to is that silver bugs have occasionally strange expectations with regards to both the dimension and the time involved for that to take place. If you look at the spot price of silver over 3 years, as an example, and you're disappointed, I would suggest that you re-examine your premise.
Looking like the past few months, it seems like it's just been stuck in this range. I mean,
yeah.
Based on what we're seeing and hearing about all the demand everywhere.
Well, I think it's
more.
I think it's important to note that there hasn't been very much by way of a silver shortage in institutional quantities, which is why Sprott has been able to buy 50 million ounces without paying the extraordinary premium that the stackers have had to pay. The second thing that you have to note, however, is that silver is unique in that it isn't merely a monetary metal, it's an industrial metal. And one of the things that's happened in the silver space is, particularly in light of the shutdown of a lot of manufacturing and consuming capacity worldwide, that industrial utilization of silver has been slower than would otherwise have been the case. When you see a new sewage treatment facility built, a water treatment plant, it's using silver. When you see a solar panel installed on a roof or in a commercial array, it's using silver. And if you have the type of economic slowdown that the world has experienced over the last 12 months as a consequence of COVID, as an example, production facilities for solar panels in China being shut down because of the fear of transmitting disease, what you will see is that while retail investment demand for silver has been unusually high, fabrication demand for silver has been constrained by COVID.
Okay.
So I think to some extent they offset each other, but make no mistake, the increase in retail demand for silver, if it keeps up, will have an impact on the silver price, both in the near term and in the long term. Markets always work. It's just that they're messy, and they don't necessarily work on the time frames that we consider. You may recall our first interview when you asked about the availability at the wholesale level, and I said I never would have expected that an aggregation of retail buyers could impact the physical supply in 1,000-ounce products, but it did. And my suspicion is that what you're seeing in silver right now has two impacts. One is a near-term impact, as some people are attracted to silver in the context of a silver squeeze. But the more important thing that's happening is that a whole generation of investors, some young, some old, are being attracted to the subject of silver. And in fact, the necessity of having a medium of exchange that simultaneously a source of value. In other words, I think that this has longer legs than, say, GameStop or AMC, which are simply about market structure, rather than about the utility of the substance itself. And that's what particularly attracts me.
I want to speak to Sprott's purchasing of so much silver that you just mentioned, 50 million, 53, 54 million ounces so far year to date. And I know you're not on Twitter, but we are. And so is a gentleman who you might know who goes by the name Jeffrey Christian.
Oh, yeah.
And there has been a bit of a Twitter battle going on that I'm going to share a little tweet that he and I had together. So we were a little critical of Jeffrey Christian and CPM Group, how, you know, supposedly these guys are one of the top silver analysts on the planet. I've watched all the videos they put out on their little channel. I think we give them more views than anything, because he does a video, you know, 25 people watch it, then we tweet it and it gets 3,000 views. But so we started talking about this and talking to Jeffrey and tagging him on Twitter. And we mentioned, you know, he's supposed to be a silver analyst, but he has yet to mention this year that Sprott has bought 50 million ounces. And I think year to date, we've only mined 300 million ounces. So you're buying roughly 1/6, 1 out of every 6 ounces that comes out of the ground in 2021. And his response to that was, when something has no meaningful or measurable impact on the market, we tend not to mention it. And then the question is whether Sprott pays the Wall Street Silver Reddit managers. So can you confirm or deny? Have you ever paid me any money, Mr. Rule?
I need to say that I am not a Sprott employee.
Okay.
I'm a Sprott shareholder and a Sprott director. But I know certainly that I have never paid you any money, and I'm relatively certain.
If you want, you can.
Well, at some point in time, I'll buy you a beer for sure.
Okay. Ivan's underage. He can only eat ice cream. So just
to the best of my knowledge, Sprott has never paid any marketing fee to anybody associated with these products that wasn't internal. I need to say too that I have a lot of respect for Jeffrey, and I regard him as a personal friend. He goes to great lengths, I think, to debunk some aspects of the silver story in the effort to be, at least appear to be, institutional and conservative. Part of his business involves managing people's precious metals holdings by helping them buy precious metals and then leasing them. And the whole concept that hypothecating gold and silver could be dangerous to one's financial future is not good for Jeffrey's business, which I suspect that he would acknowledge. Having said that, with response to his tweet, when he talks about us as an irrelevancy, I think that what Jeffrey's referring to is not so much our purchases as a function of new mine supply, but rather the impact of our purchases on the total inventories of silver, including existing silver worldwide. To Jeffrey, all I can say is if current trends continue, you ain't seen nothing yet. Nobody knows the amount of silver available above ground, in system or out of system. When I say in system, I mean good delivery for the LBMA or the CME. And nobody knows very much about the out of system silver inventories, above ground silver inventories in the world. So I would say in Jeffrey's defense, he is probably talking about 50 million ounces in a circumstance where he is looking at above ground inventories, which he estimates to be in excess of 1 billion ounces. If you look at that, there's two ways to look at it. One, in a year, if the 1 billion ounce number is correct, we've bought 5% of the above ground inventory available in all categories in a year, which is astonishing. But the second is to look at the volume of the growth, if you will, of the stack that we have on behalf of our unit holders. And I think if Jeffrey looked at the velocity of the increase of silver that is effectively taken off the market, that even he would have to be impressed.
We have another question from Ditch the Deep State for you, Rick.
Great.
At times in the past, during 2011, PSLV traded at a fairly large premium, over 20%. Would a premium increase trigger a new class of shares?
A premium increase wouldn't. We don't want the same circumstance to occur that happened in the last financial crisis, which is to say that the unit holders buy Sprott physical silver at a substantial increase premium to net asset value. On the other side, it's important to note that our structure, our redemption structure for institutional holders is such that if we ever trade at large discounts, the institutional holder can short shares of Sprott, or pardon me, short the physical metal, buy shares of Sprott, redeem the Sprott for physical metal, and then collapse the hedge, which means that we will never, because of market mechanisms, I should never say never, but it would be very unusual for us to ever trade at a substantial discount to our net asset value. You may recall that before we took over the Central Fund of Canada, they had no redemption mechanism in place, and they consistently traded at a 10 or 15% discount to net asset value. One of the nicest things that we ever did for the retail investment community in the metals business was take over the management contract, or pardon me, buy the management contract for the Central Fund of Canada and implement our redemption strategy, which over 2 months eliminated the discount. So what we want to be is the most responsible surrogate for physical ownership available in the world.
Nice.
That's what we'd like to be. Certainly for U.S. taxpayers, or for certain U.S. taxpayers at any rate, we've accomplished that.
PSLV rarely sells silver as compared to SLV, whose authorized participants routinely add and remove silver. And what's the philosophy behind that? Why does it seem that the silver going into PSLVs, it's a one-way trip?
Well, for the most part, it is a one-way trip. The only way that you would see silver come out of PSLV would be in extraordinarily small quantities to pay the storage, the insurance, and the management fee, which is infinitesimal, or in a circumstance where PSLV sold at a substantial discount to the net asset value of its holdings, so that the ARBs, as I say, could short the metal, buy PSLV, redeem, and cover the short. In the case of the ETFs, they have to accommodate inflows and outflows every day. So it's not uncommon for SLV to add 3% to its inventory in a day, or have to sell 2% of its inventory in a day. It's that in and out that forces SLV to have to use, as an example, deposit receipts and delivery receipts, that opens them up to the criticism that, at least for some portion of their asset base, that they're unsecured creditors rather than silver holders. The architecture of PSLV was always to minimize counterparty risk, and the structure, in effect, is a trust, which has the effect of being a closed-end fund, means that we don't have to trade daily in silver to accommodate inflows and outflows, just inflows.
Rick, are you concerned about inventory of silver for next year?
I'm less concerned this month than I was last month. It was disconcerting to have a desk that I think is the largest physical good delivery silver buyer in the world encounter difficulties. 3 years ago, well, I need to say that the service that we get from the bullion banks is incredible. It's, I guess, the kind of service that you might expect if you're the biggest customer in some places. The idea that we exhausted the bullion bank's inventory in markets that were within easy trucking distance of Ottawa and Winnipeg, I have to say it surprised all of us. We have an absolute superstar trader. She's working 24/7 right now. and she has kept us in very good stead. But after the experience of 4 to 6 weeks ago, I think it has the whole silver industry awake. The shortages, I shouldn't say the shortages, because we never experienced shortages, but we experienced difficulties. Listen, if you have to do what we have to do occasionally right now, which is fly silver from London to Ottawa or Winnipeg, that's both inconvenient and expensive relative to what we had to do 12 months ago, which was move it from, let's see, the RBC vault over to the Sprott vault at the Royal Canadian Mint. That was a lot more convenient. Or after that, truck it, say, from Montreal to Ottawa or Chicago to Ottawa. Trucking stuff is much more convenient and much cheaper than flying stuff.
Yeah.
We have been able to do that, but the fact that we had to do it is interesting. What we don't have to worry about ourselves is title to our silver, whether or not the seller who sold it to us, how they came on that silver isn't our problem. Our asset isn't simultaneously somebody else's liability. We don't deal in delivery receipts or depository receipts. We deal in good delivery physical inventory. So from our point of view, other traders' problems are precisely that, other traders' problems. They aren't our unit holders' problems.